Good morning, everybody. It's Cowboy here. Whoa, what did I just do to my screen? There we go. Sorry about that. It is Christmas Eve. We're going to do a special here today. There's not actually a lot to talk about with markets. To be honest with you, usually this week is super slow, but there is a caveat to that. There's something that everybody needs to know about Christmas, and it relates to Bitcoin specifically. So we are going to focus on the crypto charts today because most of the time, your Forex charts, your indices, all the other stuff, gold, silver, that stays pretty quiet. But Bitcoin is special. So, and again, apologies last week for there not being some shows. Had some fair amount of technical difficulties. I'm working with some new equipment, and to get this program to talk to that program and so on and so forth, that can really be tricky. So, just getting that done, having to work with our own tech department, our own IT, if you will, the Algo Factory IT department. That's me. That can be a lot. So we're here. We made it. It seems to be working. Let me know if you hear sound, right? So let me put a comment in the comment section. I know we got a few people watching. Can you hear me? Question mark. So let's make sure that you all can hear me. And I'm just going to go ahead and get things started. We got a few people watching now. What was I just talking about with Bitcoin? Why do we have to watch Bitcoin during the holiday? Well, this is why. Your stock market, your Forex, all that stuff. Forex actually stays open, but that's a kind of a specific market. Almost every other market is going to remain closed during, say, probably today and tomorrow. In fact, let's take a look at the calendar here. Tuesday the 24th, New Zealand, Australia, Swiss, Europe, everywhere. It's a bank holiday. It doesn't look like it is in the US, but everywhere else it is a holiday. And then Wednesday, the 25th, it's just gray, excuse me, gray envelopes all down the list. Nothing but bank holidays. Okay. So that just tells me that there's not a lot happening. Now, for the Forex market to work and for the other markets to work, there needs to be money that moves around. Well, that's not the case with crypto. Crypto doesn't have the those kind of issues. Crypto is not reliant on human beings. It just works, especially when you're talking about Bitcoin. Had a fun talk with Koob over at Algo Factory the other night. That was a lot of fun, and we did figure out that yes, we knew this already. We are just having fun kind of chopping it up. There's protocols and there's blockchains, and most of the time either one doesn't require humans. Protocols may require humans a little bit more often. We're not going to get too far into the weeds on that. What we're going to talk about is what we think is going to happen with Bitcoin, because it can operate and will without human beings. One of the things that is notorious, one of the things Bitcoin is notorious for, are large moves when nobody's watching. Let's take a look at the 4th of July. So let's look at 7/04, 2024. If I remember correctly, there was a really big move. Yep. So look at this. You had pretty much going back to mid-June, so almost a month of more than a month of very kind of weak price action. You had a little bit of price action here and there because of maybe like some news events, but in the end, Bitcoin's very, very tame at this time. So if we were to expand this out, we'll see that not a lot happened, and that goes over 29 days. Actually, let's do this properly. It really goes back how many bars is that? 42 days. So over a month of very weak days, with the exception maybe of like one day here. And then all of a sudden you get a couple of decent days, and right on July 4th, you get this massive candle right here. And that's because nobody's paying attention, right? And if we were to zoom in there, I'm willing to bet that even the candle on this following day with that kind of wild price action. And let me draw a box around this to make it easier for you all to see. Find my tools here. Looks like my tool chest is gone. That's all right. I know it's around. We'll get it back. Here. Now, these two candles represent the 4th and the 5th. And I'm willing to bet on the 5th, it was in the wee hours. So technically, for all intents and purposes, it was the 4th, right? So let's go ahead and take a look at the inside of that, you had the fourth here, which was in the afternoon, and then you had the Thursday, the fourth. Actually, this was the big action. So this happened from about 8 p.m. until, what is that, 11:30 p.m. EST. You had this massive move when there wasn't really very much going on before that. You had a little bit of action on the third, but really going back for, oh gosh, I mean, like I said, a month, not a lot of action. And then all of a sudden on the fourth, you get this madness. And this is what happens because nobody's watching. When nobody's watching, you don't have a lot of participants. You don't have people there to buy it up or sell it up or, take advantage of these massive moves. And this is when the market makers can make a lot of money because what they do is they push price towards stop losses. They liquidate on charts and they need price to go where they want it to go. Now, when there's a lot of market participants, a lot of times price doesn't want to go where they want it to go because market participants are buying and selling things. They're active, they're working. Well, in this case, when there's not a lot going on, market participants being out of the picture because they're drinking or Christmas and holiday parties and they're, opening presents and all this. Well, that's a good time for them to strike, right? So just to look at the chart going back, we had this massive red candle down due to Jerome Powell being hawkish during his speech. There was an interest rate cut priced in. So I think the hawkishness was not exactly expected by your average person. And that's why we saw prices do what they did. However, we do have here what I think may happen is going to be a strong move up or down, and it could go either way. And the reason that is because the algos are non-specific. There's high time frame volatility. Ultimately, there is some bearishness. There's a little bit of vulnerability in the algos here, right? So if all this gobbledygook on the bottom. So if I had to take a guess what was going to happen, let me just take a brief, quick glance at what's gone on. Yeah, I think if I had to bet, the move would be down. And I know that scares people, but this is something that I've been, putting on Twitter. And again, I haven't been quite as active on Twitter with anything besides video posts. I probably should fix that. And that's going to be something that happens ideally next year. But what I did say recently was I know new people in crypto, and I know who they are. It's easy to identify them. I wait for the bull market. I wait for a pullback. And then I get all the texts and phone calls. Oh, what happened to Bitcoin? What happened to Bitcoin? So it's like, this is normal. This is totally normal. So let's take a look at the pullback that we've seen so far. I think it's been about, 10%, maybe 12. Let's actually get the real number on that. 15%. And that is a lot. That's a lot for somebody who's used to stocks. That's a lot for people who are used to traditional finance. But in crypto and Bitcoin in a bull market, that's normal. We got to think of it this way. So what I'm trying to do here is give you some perspective as to why a pullback to maybe even below 80,000 would be normal and healthy. Okay. So this is the way markets usually move. I'm going to draw this, we're going to explain it, and then we're going to move over to the private live lab. So sit tight here. Markets move where they expand, and then they do these little pullbacks. And then they expand, and then they do these little pullbacks. These are called impulses and retracements, is what they're called. And when you have an impulse, and then there's a retracement, this little area where it kind of pulls back and creates this structure, that structure is going to be basically a source of liquidity. And what liquidity is, it's where there are market participants. So when there are no market participants, price will move. When there becomes some market participants, price might stop, gather some steam, and then move forward. This is why on Christmas Eve or early Christmas morning, there aren't a lot of participants and price may make a strong move, right? That's the whole explanation as to why we're concerned about Bitcoin during Christmas. So if you're a degen like me, yeah, I'm still a degen. I've been in this forever. But if you like to catch trades because you just like to trade all the time, then look no further than Christmas Eve. You might see something. It might also be not that predictable. But let's get on to the explanation here. This pullback, grabbing liquidity, is something we have to look for. And we haven't quite seen a pullback like I would like to see. Now, with Bitcoin, it might not happen. During the bull market, you will get a pullback, but it might not be the pullback. You might get kind of a partial pullback, but what you want to see for healthy chart building is to see a pullback to the prior liquidity, right? To where it did this pullback, extends further, pulls back, and at least grabs some of that. Well, let's apply what we just did to the Bitcoin chart, right? Let's see what that would look like here. All right, and I'm going to go ahead and zoom out a little bit. That's on the daily. It's good enough. Let's see. No, we're going to look at the weekly. And we're going to look at actually a different Bitcoin chart without all my marks on it. Oops. Let's do that. Let's go here. Okay. Look at that. Oops. Look at that bull flag I painted, or the chart painted, but I showed that worked out. In fact, if we were to do this, that's pretty darn close. That's nice. So a pullback here is warranted even by bull flag standards, but let's delete all of that. Okay, we just talked about this. Now we're going to draw it right here. Move up. Here's our pullback. And we have a move up. Well, where's our liquidity that we discussed? It's right here. Where has price gone? Not to the liquidity. Hasn't done it. And it may not. It doesn't have to. It's not a rule, but it's common. So to see a pullback to mid 70s would be totally normal and healthy for Bitcoin. Now, it probably would scare out some people. You're looking at basically a 30% pullback, right? And a lot of people, my phone will blow up. Not that I don't like give investment advice. No one no one's mad at me because Bitcoin fell. I just get a lot of questions from people who don't have the stomach for crypto. But a pullback to high 70s, mid 70s, totally normal and healthy. Just letting you know that this could happen. Now it might not, right? And if we match this move with a Fibonacci tool, a 382 pullback would be to the high 80s, which would be a totally normal move during a FOMO event. Now, if that were the case, in fact, I prefer to have this be the move. So 87, 88, totally normal. Low 70s, totally normal. These are totally normal, expectable moves. Don't be scared if it happens. Could it be that 108 was the all-time high, 110, whatever it went to? Yeah, maybe. Might be that's all we see. Might be the end of the bull. I don't think that's the case. I don't think it's going to work that way. I think price will continue up, but it might not. We're going to see. The algos give us clues, and the algos have some vulnerabilities in it short term. So just wanted to warn you that there could be a move. It could be Christmas. It could be New Year's. It could be none of those days. It might not happen, but if I had to guess, we probably would see a move to anywhere between, say, 88,000 to maybe 75, maybe even 73,000 before the bull market is done. Very, very possible. So thank you all for watching. Now, what I'm going to do is head over to the private live lab, right? So Algo Factory is our company, obviously. You're here on the Algo Factory channel. We teach people how to build trading algorithms. All this stuff on the screen, this is classic price action. I did use some algos to kind of give me some clues as to which way price would go, but all of the stuff that I draw on the screen here is basic price action, and we do teach that at Algo Factory as well. So we're not always doing the indicators and the fancy stuff. And as a matter of fact, this is really, really healthy, very healthy stuff to know for trading. Market structure is the basics, right? Price action, that's the basics. Trading is basically founded on that. We also teach you how to use indicators and some basic mathematics and data science to build your own trading plan. And it's known as an algorithm. And you don't have to know how to code or anything like that. So it's something that I've taught people of all age groups, all knowledge base groups, right? All, qualifications, if you will. And it's pretty good stuff. So come on over to algofactory.tech. Learn how to trade like a hedge fund pro, and we will make sure that you never forget.
Join us or die.